HMRC just sent you a letter. You open it and your stomach drops. It says you're being investigated. But what does that actually mean? How bad is it? Are they going to freeze your accounts or show up at your house? Deep breath. I'm Antonia from Abacus Jack, and today I'm going to explain exactly what happens during a tax investigation in the UK, step by step, so you know your rights, your responsibilities, and how to stay one step ahead. I understand that this can really stress people out, and I want to take some of that burden off your shoulders, because I don't think most people go into this intending to do something wrong. And if it's a mistake, we're all human. It's not going to be the end of the world. First, let's talk about why HMRC opens an investigation. It could be a discrepancy in your tax return, large changes in income or expenses year to year, late or missing filings, or even completely random selection. Yes, they do that. You don't have to do something wrong to be investigated, but you do need to handle it properly when it happens. There are 3 types of tax investigations. 1, an aspect inquiry. HMRC has a question about one part of your return, maybe your mileage claim or your expenses. Maybe on your self-assessment you claim some job expenses and they want some more information. 2, a full inquiry. They want to look at everything: income, expenses, bank accounts, records. Or 3, the random check. These aren't based on suspicion, just luck of the draw. Your letter will tell you which one it is. But what happens if HMRC selects you? First, you'd receive a notification letter. HMRC will contact you or your accountant. Don't ignore it. This is your chance to respond calmly and provide context. Next, they'll ask for records like bank statements, invoices, receipts or contracts. Then comes any meetings or calls. HMRC may want to discuss things over the phone or face-to-face. You can and should bring your accountant with you for this. After this, HMRC will review the documents. This can take weeks or even months depending on the complexity, and generally HMRC can be very slow to respond. Lastly, you'll receive an outcome letter. They'll either accept your evidence or raise issues. If they believe tax is owed, they'll explain why and calculate what they think you owe. And if they start with something like a VAT check and find incorrect treatments, they might widen their search to your other returns. They're not just looking for fraud. HMRC is checking that your records back up your claims. Red flags include missing receipts, unexplained bank transfers, mixing personal and business expenses, and big income dips without explanation. Keeping solid records can prevent most issues before they happen. If HMRC finds an error, you may face a tax bill for underpaid tax, interest currently 7.75%, penalties up to 30% or more depending on how careless or deliberate the error was. But if you cooperate and it's an honest mistake, penalties can sometimes be reduced or even waived. Tax investigations are stressful, but they don't have to be scary. If your books are clean and you've got the right help, you'll get through it. In the past, we've seen VAT checks for a new registration and we had to provide copies of specific invoices that they asked for. We've also had job expenses challenged on self-assessment returns. Both cases were resolved with well-recorded, organised evidence and record keeping. It sounds boring, but it's so valuable in these scenarios. If you aren't using systems to save your invoices and receipts and are worried what might happen if this ever cropped up, book a call with us at Abacus Jack. The link's in the description. And if you found this helpful, share it with your business friends, give it a like, and subscribe for more no-fluff finance advice. And let us know in the comments if you've ever had a run-in with HMRC.